Okie dokie, we're going to be doing one more video. I'm going to share my screen, recording this for school. I'm going to cover a few charts, but I'm also going to be talking about, the actual topic of this conversation will be system. And under system, I can't think of more than 4 things that dictate this whole process. Just a sec, I'm just fixing my mic. This whole process of trading. You're looking at the 30-minute chart of oil, and I'll explain everything here. But when we talk system, there are just 4 things that make a system complete. Sure, there are a few more, but these are the most important parts, and this is what needs to be drilled inside every trader. A mechanical process around execution, exposure, risk management, and profit taking. And then number 4 would be analysis. None of these are in the right order because everything begins with analysis, then gets into your risk management profit taking plan based on the analysis. And then when we move to that, when the analysis is done and all of your preparations are done, what you're switching into is your exposure module and then execution. So all of this is in the wrong order. So let's fix that. So let's explain the actual process. The process begins, everything begins with analysis, because analysis tells you what you're seeing and what the day could be bringing. And this is the most important philosophy when it comes to trading. Like, that's the most important part, because when this is done, the rest falls into place, because then you can decide what kind of risk you're going to be taking and where to profit, because that answers those 2 very important questions. One question: what kind of a day am I about to have? What is the market showing? So once the analysis is done, you do your risk, your profit levels, your ideas of what can happen with the market. You see it with the chart. The charts, they don't lie much. They usually paint a very clear picture. And I will show you how the charts have shown us that the war will be restarting by just looking at oil. Now, if you're making money or not on that completely depends on the last part of this, which is execution. Okay, so when it comes to risk, I'm a firm believer that you need to focus on paper cut losses. I'd rather have 70 losses in a row, but they're very small and manageable, than one big loss. Because that one big loss, give you an example, I buy oil right there, okay? And I just leave it. I'm like, yeah, it's going to go up. And now I'm just, prolonging being stuck in this loss, and I'm not seeing what the market might be telling me. Maybe it's showing oil's going to go down and give me a much better entry down here. You don't know. Because when you're stuck in margin, the only thing you can think of is, I need the market to go my way. That's the only thing you can think of. That's the only thing you're looking for. And you might overexpose, you might add more positions and so forth and so forth. And before you know it, a small and manageable problem has turned into a disaster. Once we're done with this, we can decide our exposure. Exposure literally dictates your complete risk management and how much money you're going to make. Because if you guys watched any of the other videos, I very clearly stated, gold has an opportunity, let's take it. Because we want to add to winners. When the market's giving, one sec. When the market's giving potential trade ideas, but you see my signals, they're going to be super tight. Because when I'm adding, I want to be tight. You're going to see the signal come up now. And you can see that the second trade, very tight. I don't care. I'm fine losing because my risk reward is 14-1. I can take 13 of these losses and win 1, and I'm going to be in profit. You get it? Then we move on to, which is the final part of the system, which is execution. The problem being is that everybody focuses on this thing here, never really thinking about all the other things. They open up a chart and they're like, trade. And I've done that for too long, wasted years of my life, thousands of dollars, hair, hours, life gone, just because I didn't follow a damn process. I've said this in a video before. An engineer follows the laws of physics. A doctor follows a checklist. Airplane pilots, even with thousands of hours of flight, still focus on a checklist when taking off. You've watched the movies. Flaps, check, this, check, that, check. They don't only do that because it is required by law. They also do that because they cannot leave such an important job to their mind and memory alone. We're forgetful human beings. How many times have you wanted to leave your house and you couldn't find your phone, your keys? See what memory does? You put it somewhere. You did. Yet you can't find it. Checklists. This is my checklist. This is what I focus on. Then, like I told you, it's all about paper cut losses. If you cannot take paper cut losses, you are in a world of trouble, my friend. You're in a world of trouble. So that's what we're going to be covering in this video a little bit more of. I just want to prime you guys and, get you set up for what's to come. But what you see on the charts at the moment, is WTI. We're looking at the monthly mode, which is the monthly highs and the monthly lows for WTI. The yellow line over here is the monthly VWAP, and the blue box on top and the blue box below are essentially the monthly bottom and the monthly top projected from last month. But as you can see, it's not taking the monthly high of the previous month, nor is it taking the complete maximum low of the previous month. This is because it's based on the daily aspect of the market. I believe that the daily closings are very powerful and quite important. And if we look at the previous month, for example, of oil, you can see that, well, a couple of interesting things, but to see those things, we're going to switch to a 1 hour chart. I'm going to leave this here. And this is what oil, look, this is why analysis is vital. So if we just take a snip of this whole market here, what we see is this is the monthly high and this is the monthly low of the previous month, okay? And we are holding this level. You can see we are holding it. But something else is happening that's very interesting on this chart. And that is, first of all, these blue lines over here that you see, they are the 1 day levels that have made new lows or new highs based on the yearly. In this case, this is all buyers because oil has just been going up. So we face a rejection here. And look at this. We found sellers here. You see this? We found sellers here. So the market makes an aggressive rally up and then completely kills it off. It does form a higher low. So it's natural the market slowly comes back up, retests that level, goes above, collects the 1 day levels, manually mapped, very important too. But then look at this. See, we come right back there. But what does price action do before it goes there? See this low? Well, we breach it. So now this is a lower low. And sure, we make a pullback. This is what I'm saying. Execution is vital. So imagine, oh, we made a lower low, so I take a sell. And then you have to wait for hours and days and weeks until it goes into profit. Only a fool would do that. Because your money, the currency you're working with, is not only financial, it is mental too. Mental as well. This is vital for you to understand. When you have money in the markets, you cannot think straight. It is something you need to work on, that when you have money in the markets, you need to be objective and not get married to absolutely anything. You can marry a good habit, a morning run routine, reading books, working out, thinking positively, spending time with people that make you feel good. Those are things you get married to. In the markets, you don't marry any specific trade because trades can flip. As we went here from higher highs to lower lows, we did that very quickly. You need to be subjective. In any case, you can see that we do attempt to break. Yeah, so we do form another lower low, and then we make what? A lower high. Now, mind you, you can see these dots, and sometimes they don't seem very important. See that? They don't seem very important. But here, it was vitally important, because here, at this dot, we established our final lower high. The yellow line you see is the monthly VWAP, and what we're doing is making V rejections out of that VWAP. We eventually completely tumble down, where we get out of the monthly lows while we're forming lower highs. And that's what I mean. Well, that's what I'm trying to say, is your analysis will give you information when the market's going to be good. Because if I program an algorithm to short this here, he would be wrong. But he would be right over here. But he wouldn't be able to get this context that I'm drawing for you here. Only your eyes can do that. And in this case, you would know, okay, we are rejecting, we're forming lower momentum. Something is cooking at this monthly low. Something is cooking. Right time, right place. Okay? Sometimes the timing is not right, but it is the right place, like here. Then, look at the white dots again. What are we doing? We're rejecting those white dots. And those are yearly extensions. Then we have some more white dots here, so let's look at them. Yearly and monthly. We got the quarterly ones here, and then again, we build up around the yearly dots. We attempt to claim, we go down. But now I'm going to show you how analysis could predict that this market turned around. So the month ends, okay? The new month begins, and we're trading very nicely outside of the monthly lows. We're trading out of them. We're below. Analysis goes in stages. That's why I'm showing you just snippets of things. Like before this rally, we're going to go over the analysis just so we can see. So we have monthly lows here, the white line. But what do we have here? We have a compression. Look, it is a compression. See? Price stuck in an area. In this case, a contraction. Price blows up. Breaches this top, look, breaches the top and forms a higher low. You don't know where the higher low is going to be. You just don't know. I don't know. You don't know. But you can see these little dots. See? That's the quarterly 0%. And they line up always for the whole quarter. And in this case, we have a strong move down. And that's what you need to wait for. Strong moves. Strong moves give you context. Little moves, they don't give you much because here, price is compressed again. Hits the quarterly. Eventually breaks out of this context here. Starts forming natural momentum. And that momentum is leading where? Low. One sec. Lower high, lower low, higher high, higher low, breach, higher high. What are the lows doing? They're moving upwards. And then where would your best positions be? Well, they would be positioned around these areas here. This is where your best positions without knowing this one, but you would have known these ones. And then if you look a bit of more context, this is where I started really going long and started to send you guys alerts. So let's look at the context. We have a compression of price. This is 2 weekends ago. We have a compression of price, and I started buying in this area here. This was my buy. You can see we are holding this yearly buyers, you see? We're holding. We're also holding the monthly VWAP. Sure, price action might seem like it's trying to shift, but it's getting compressed. Price is getting very stuck in an area. We then blow up. Look at the yearly 75. If you guys remember that, that's this here, where we accumulated. Then you can see this, the next dots. Well, that's where they are. And what are we doing here? One more weekend. We make a rally on a Monday. We get compressed again. And I covered this last week when I told you guys that I'm still buying oil into Friday. Compressed. There's the dots, multiple of them. You start ignoring them because you're obviously paying attention to price action. Here's that quarterly dot right there, holding us nicely. The lows are starting to shift towards the upside. They're holding, and we push up. Where are we now with price? It was a natural move down, and this is where drawing your levels becomes vital. So check it. From here, we make a new monthly high. Green, 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 high, high. Green, green, high. So you already have it, it's automatic, but I'll just highlight it. And you can see that aside from this glimpse of very strong push down, that's why I bought this trade here. That's exactly why I bought it. Put the stop loss at the low. It's not a paper cut loss, but even if I get out of this now, I've already cleared. Look at my risk, 1,500, and I'm up 3,500. I could get out of this with over a 2-to-1 and be happy. I've added some more positions here because we are at this next level. Stops, relatively tight. $300 here, 1,150 here. Am I going to be right? I don't know. I don't know if I'm going to be right. But based on the profits I've been making, these are paper cut losses to me. These losses are not going to hurt me. That's why I'm not locking this position in yet, because the momentum for the time being is on my side. What do I mean by this? If we're looking at the monthly level of price action, and I'm just still showing you the very first part of this process, which is analysis, and it's something I will work on with a lot of detail. But if we look at it, look at how this market is moving. Extension, pullback, break of extension, pullback. This market's going up. See, this market is going up. And there is a very high chance it can reach here, but if it doesn't, I have some alerts set up for, and I'm going to switch to the weekly mode. So now these levels are weekly, and I'm going to show you. We have some untested levels over here where we have made weekly lows. I think it was in the 30 that I was focused on. No, it wasn't hour. It's hour. So you can see this, take profits. Well, they line up with this level right here where we pushed and made new lows. See, we also have another level over here, which lines up with the yearly dots, which were acting as support and resistance here. So I'm either taking profit here if we come, but I'm going to try and squeeze it up here. And all of that happens with analysis. And when you do your analysis, you can then go, for example, to the 5-minute and wait for a little bit of precision. Precision can be many things. Precision can be this level that we mapped. You need to find your best entry price. That's what your job is as a trader. And reject absolutely everything else that falls out of line on that. What I used to do a lot of is I would look and say, oh, oil's going up. And my analysis was right. But the problem is when the market started going up like this, I would buy. And what I was doing is I was buying a rally. And I was in profit, as you can see here. I would be in profit for some time, but then the market would do this. And I learned to understand that if I am thinking about buying, what I need to do is buy when price goes down. and remove the idea completely of buying when price goes up. What I'm trying to explain is that, yes, add to your winners, but add on them when the market is moving in your favor. Do not seek to add. I got stopped out on that gold trade. Do not seek to add on them when the market's going up, because you will always find a pullback, whether it's on a 1 minute or a 5 minute. You're going to find situations when the market will do this. Your job as a trader is to try and get into these situations when the market's making that pullback. Go as far as creating a rule for yourself that if I'm not in profit in the next 5 minutes, I'm going to get out. That's one idea. That's called a time-based stop. So if I enter a position right now here, if in 5 minutes that trade is not in profit, close it and wait for a new one. But I find it much better to find a level in the market, call it a line in the sand, and say to yourself that, let me go to the daily. So this is the daily mode, okay? And from here, we made our first extension to the daily highs. What I'm saying is, use this as your line in the sand. Buy now, stop loss here. I buy, stop loss. If price stops me out, buy again when it goes above this. As long as my analysis tells me that, Dennis, you are correct, nothing is changing, you are bullish, buy there, tight stop. This way I can open a monster of a trade, 5, 10 lots, risk $500 here, but by the time it comes up here, I'm going to be up 10 grand. Because my risk reward will be screwed to 17 to 1, 20 to 1, 30 to 1, but my losses are going to be paper cuts and not atomic bombs. That's what I'm saying. Level, that's my execution philosophy. I create a level in the sand, which is this. In this case, it would be this, and I would buy above it and close below it. So here, stop loss, get back in. So I'll give you an example. I buy, stop loss, get back in. You understand? So small loss, already covered it. Already covered it. But this is what an algorithm cannot do. It cannot make decisions by looking at the chart. So if price is doing this and you're just getting in and out, well, that would be silly, right? So you need some gut feel. And gut feel comes from, open up the chart, check. Okay, here. I'm looking to only go buy. Entry, exit, entry, exit, entry. That's 3 trades right there. 2 losses, 1 monster win. You understand? And that gut feel only you can create. Only you can train your mind. I've been thinking a lot, what is the closest definition to trading? And it's swimming. It can be any sport. It can be reading. It can be anything. But it's swimming. I'll tell you why. I cannot teach you to swim by you watching me to swim. I can't jump into the water right now and say, look, all you got to do is this. Because the moment you jump into that water, everything I just shown you goes out of the wind because you're fighting to survive right now if you don't know how to swim. So how do you learn how to swim? Slowly. 1 step at a time. You swim like a dog, and your first mission is learn to stay above water. And I think that because I thought of that, the only way I'm only going to be able to teach people to really become profitable traders is by creating a process of how do you learn how to swim as a trader. And it's the philosophy of taking paper cut losses. Because in the beginning, the mission is not, I'm going to make a lot of money. NASDAQ is giving us an opportunity soon. I'm going to switch to NASDAQ very quickly. So I have these orders, the 2 orders that I've sent as alerts. I'm much more interested in getting into NASDAQ in New York, but I will still take a trade just to give you an example. Look, it's coming below the automatic last buyer's level. This is on the 5 minute. So I'm just going to take a very quick trade here, but wait for the close first. or a strong move, because gold is showing good indication that it's going to continue going down. That trade was spot on. Anyway, the first process of a trader is, my friend, you need to learn how to survive. I'm going to take another short on gold because now it's below my line in the sand. And that alert comes out again. And that's what I want to show. Risk reward, 12.5 to 1. This is not far. This is not far. Not far at all. And now we're going to take a trade here. Now look at this. Very nice tight stop. That's 28 points. Look at this. 28 points, $144. And where are we going with our take profit? Well, we're going to go back to the mean, and we're going to send out our alert. And I want you to focus on the risk reward here real quick, because that's 11.5 to 1. Now, if you guys check some of the alerts from NASDAQ yesterday, some of them didn't hit take profit. These ones. 4 of them did, though. 8.5, 5.6, 4.7. 1, 2, 3, 4, 5. So that's 10, 15. That's over 20 to 1. And how much did I lose? 1 and 1. That's what I'm talking about. I need to send these alerts out. I mean, it's how I trade. I like my small losses and I like my big wins. It's how I'm able to clear, in good months, hundreds of thousands of dollars. Hundreds of thousands. And I'm not even trading with focus sometimes. I break my rules of not doing my analysis and stuff like that. But if you guys want the process, I just told it to you. And it's on WTI. It's this. And the execution is line in the sand. And that's what I'm going to be basing my whole analysis on. Course, not analysis. But yeah, WTI, you can see we did map this level in here, and this automatically prints on CTrader. There it is, automatically. See, now it's moved here, and those are our buyers at the moment, and that's your line in the sand. There is a perfect way to draw this even better, and what you're looking for is for compressions in the market. Here, the market is stuck, you see, and then it blows up. So this is a very important level. You don't want to map every level, but this one here, you can see price is stuck a little bit. 5, 10, 15, 20, 25, 30, 35, 40, over an hour, stuck, and then blows up. And this becomes an important level. And this becomes your line in the sand. And yes, I would have bought here. And yes, I would have been out here. And yes, I would have rebought when we came back above this. And yes, I would have added on the break of this. Because that's the way I trade. The idea is small losses, big wins. And if you follow the process of properly preparing yourself and doing your analysis and all of that, the whole game just becomes easier. And that's why I call this community Wait, Stalk, Strike. So now, all of the course that I'm building, the first module of it is called Wait. The first part of the course is teaching you to wait. How do you wait? Where is it? Where is it? There it is. Analysis. Analysis is the waiting part. It's you sitting down and doing your work. A lot of people come to the markets. They don't want to do the work. They just say, oh, you know what? I just want to make $500. That's all. $500 a day and I'm going to be happy. Man, it doesn't work like that. You don't dictate what you want. If it was like that, sure, I don't want to do this. I want to sit at home, sit on a golden chair with diamonds all around it. I don't, but you get it? It's not going to happen. I'm not Richie Rich from that movie from the 90s. Nor are you, nor 99.9% of the population. You're born onto this world to do things you love. If you don't love the analysis part, if you don't love looking at these charts, you're not going to succeed. When I came into the financial markets, I'm telling you right now, the only reason I succeeded like wild, in my first year at my firm, being a complete rookie, having no knowledge of the markets, having no knowledge of sales, no knowledge of absolutely anything specific, I won Employee of the Year, Maverick in terms of money in for the firm. And what else? I won 3 awards that year. All of them, essentially. Account Manager of the Year. I won all 3 awards in 1 year's time. Secret? I loved what I did. I woke up every morning, clapped my hands, and said, today's going to be a good day. On Monday, people are like, oh, it's Monday. I'm like, thank God it's Monday. First in, last out. Didn't feel like work because I loved it. You need to learn to love this part of work. Like, if you don't love this, it's going to be very hard to make money. It's going to be very hard. Like, imagine going to the gym, but hating going to the gym. That's why so many people are unfit these days. People are not, I'm not saying muscly and bulk. I'm just saying generally, as a civilization, we're going down because people are learning not to love the hard things in life. People want instant success, instant money. That's why scams in this industry. There are so many scams, and millions upon millions of people have been scammed. In Ukraine, there was a call center called the Milton Group. Google it. The Milton Group. They made dozens of billions of dollars every year scamming people on get-rich-quick things. And I had a lot of clients who've fallen for these scams when I was working in the financial markets, because they would come to invest with us and we would tell them, well, you know what? We can't guarantee returns. This is not going to be easy. You're going to have to do the work. And they didn't want it. You know, they want to invest money and they just want to make millions and go live in Thailand on a beach without doing any work. Show me a person who's done that. Doesn't exist. So yeah, that's it for me now. I'm going to wrap up this session. I hope I made a couple of good points. One thing I learned from working in the financial markets and working with people is that the longer you talk, the less people remember. So that's why first and last impressions are just so important. So I'm going to give you my last impression on this video, and I'm going to go back to the process. Analysis. That's the first thing you need to do before you do any trading. Even if I send an alert, do not take it for granted. You need to understand that sometimes I have a high volume of trades because that's the way I trade. If you're not used to that, what you need to do is follow the first point, analysis. When I say I'm buying NASDAQ or selling NASDAQ or doing this or doing that, open up your chart and check. Check for yourself. If you miss out, you say, I'm not going to take NASDAQ. I'm not taking this trade. And it goes boom down. And then you say, oh, damn, I should have taken it. That's no bueno. That is not good. You cannot let your emotions spiral. The reason I'm shorting NASDAQ is it's overextended towards the upside. It is in a bear market. I will just explain very quickly why. I've told you guys this before already. These lows, these highs are coming down. That does not mean that this is going to be breached down. That means that we could come all the way up here before we either continue up or reverse back down. Anything can happen. But the way the market's set up in history, I think that the prolongedness towards the downside could happen further. The fun part is that, guys, this part here on NASDAQ, well, we held it and we rejected it and we're going up. Last time we did that, we completely went back up towards the last high. Meaning that if history tells us anything, potentially we could come all the way back up here. if the buyers take control. That's another 2%. In any case, let's go back to oil. 1 hour. The process is simple. You must do your analysis. So let's wrap this up with my last impression. Do your analysis. Do your analysis. Trade, no trade, analysis. So there is something that I love doing, and that is pre plus post. So before you start trading, you check the markets. You open up the charts. You review what happened yesterday. What's going on? Are we holding higher lows, lower highs? What is the market doing? And if we look at this analysis of yesterday, we actually held a higher low, even though you might say, oh, oil took a beating yesterday. Well, it did. But if you look at it over a 2-day period, it's actually holding a higher low. So that's what I mean, pre-analysis. When you're done for trading at night, you always do your post-analysis. Even if you didn't trade, it's always good. Check where you could have traded. So yeah, that's the last impression I want to have. I'm not going to go over anything else. Make sure you do your pre and post analysis. The whole game is development. I'm doing this for 20 years this year. 20 years. I haven't been profitable all of those years, but my profitability is going up. And I feel like I'm on really the right path to making an incredible breakthrough in my actual trading career. And the reason for that is point number 4, line in the sand. I'm actually focused, really focused on taking those tiny little losses. Sometimes those tiny little losses are in the thousands, but if I'm risking $1,000 in a trade, like on here, I'm risking $1,500, I want to walk away with 17K here. If I don't walk away with 17, I'm going to be happy with 10. And that's the point. Like that's called risk reward, because I can do this many times. And I only start doing this kind of numbers when I'm trading with profit. But yeah, that's pretty much it. Thank you. If you have any questions, this video is on school, so please drop your questions below. Thank you, and have a good day.